Hey everybody, this is John, and welcome to the long weekend and today's free video. Let's take a quick look at the stock indexes and a few other things. So first thing you'll notice, of course, today we have the S&P 500, the Russell, the Nasdaq, and the Midcap 400 all closing at new all-time highs. So yes, that is bullish. And so the question at this point is that, is this something that, is this froth? Is this something that we are going to see roll over and die? All of those kind of things. And so I always think it's important to kind of, when you're looking at something like this and just kind of ask, well, how does it compare to, prior bubbles and stuff like that? And well, the first thing I notice here is that, yeah, we had a good run up here, but then we've had some big consolidation and congestion. So if this was a 5-minute chart, how would you be looking at this? It's like, oh, this thing is about to explode, or this thing is about to die, et cetera, et cetera. And I just kind of look at this, I like Fibonacci. It's kind of like, all right, we've broken out, where are we on this? And then you can see that the 1272 extension, which is always a logical target from a swing high to a swing low, and when coupled with the squeeze, is at 2980. Now that doesn't mean we go straight up to 2980. Okay, in a bullish market, you come back and you test that 8 EMA, so that would make sense. But at this point, I don't see a reason to get crazy shorting anything when the setup is still playing out. Now, that doesn't mean you can't hedge. All right, one hedge I like here is the VIX. So, buying some VIX calls, some VIX call debit spreads is a good hedge in case we wake up and the S&Ps are down 30 points, as is buying calls on the yen ETF FXY. All right, so by buying calls on this, then if we wake up next week and the S&Ps are down 30 points, we have a hedge in place. It's a cheap hedge. They're both cheap hedges. It's insurance so that, if they don't work. So you might ask, well, why not just buy puts on the spiders? Well, if you buy puts on the spiders, you don't actually have a signal. But if you look at the yen futures here, you can see there's a signal. There's a squeeze. We want to see if that momentum is going to shift. And if we look at the VIX, let's see. There's a squeeze there on the daily, but the signal that I'm specifically looking at is actually on the 2-hour chart, which is one that I like to follow. And you can see we have a squeeze long there. Nothing much has come of it yet, although you can see that prior 2-hour squeezes here. I mean, you have seen that jump. And it's always like, okay, can we jump from 12 to 15? That's a tradable move. So that is some of the stuff I'm looking at there. And then my favorite stock for next week continues to be WWE SmackDown. This is one where we've been playing this off of the daily squeeze. Nice high short interest trade. We're just grinding higher, and we're starting to get into our first profit zones. All right, so that's what I got there. All right, and one last very exciting thing I want to share with you is that if you don't know Raghee, she's the boss. For real. And if you do know her and you know all the stuff that she's doing, she has got a free webinar that she's going to be doing on Thursday, September 6th at 7 o'clock Central. And she has found, and I've actually never heard her this excited before, but she's like, John, you don't understand what a game changer it is, the stuff I've been using. And so what she's going to be talking about is an exit strategy, a perfected exit strategy, how a simple volatility formula finds high probability trades on any chart with an emphasis on perfecting the exit part of that, right? Because entries are a dime a dozen. It's the exits that make you money. So here's what she's going to be talking about. How to remove all the guesswork from exits and entries so you can set profit targets and stops with total confidence. Why an exit first mindset helps avoid the most painful trading problems like getting stopped out early and missing big gains. Get 3 free tools that reveal invisible daily and hourly price ranges that are so accurate you'll feel almost psychic. Okay, I love that. Why most popular stop loss calculations can actually sabotage your profits. This one right here is really important because a lot of the things that people use actually set them up to get stopped out, which of course is absolutely frustrating. And then how to use third-grade math to predict volatility on any chart and precisely time your trades. So it's going to be awesome. Again, it'll be free Thursday, September 6th at 7 o'clock Central. You can sign up here, and you can go to simplertrading.co. It is not .com, .co/exits to get you there, or you should see a link in the email as well. All right. Thanks a lot. Have a great long weekend. Be sure to take that time to unplug and rest and relax, and we will see you at the beginning of the next week.